fantastic panel, very knowledgeable, investors who really, truly invest in our industry. So I'm going to ask them why, because I'm sure you want to know as much as I do. So if they'd all like to come up as I call them out. We've got Omer, who you'll remember from last year, president of Servotel in Turkey, but works worldwide. We've got Neil Jacobs, who you've seen a lot of already, from CEO of Six Senses. Sit where you like. Richard Weissmann, who's partner in KSL Capital, who you probably know have the majority share in Miraval, so what they're going to be doing with that. And then I have to thank Andrew Mendelsohn from Pegasus, who's come in at the last minute because somebody had to drop out, but Andrew invests very heavily in our industry. So thank you all. And I think we'll kick off with the residential issue. And I don't mind how you approach it because there's so many different formats. But Neil and I have had discussions about this in the past. And one of the things we're finding is, in particular, where you haven't got mass residential or they're second or third homes, and the owners want a wellness destination or they want even a spa, how does that model work? How are we going to make it financially viable? So should we start with you, Neil?
Hello, hello. I mean, I think there's a lot of different ways that we're approaching residential these days, and certainly it depends which country you're in, because the model's slightly different everywhere you go. But clearly in a North American or perhaps a European theater to do resort hotels and kind of big spas today without some component of residential will add additional financial stress to returns. So if there is a market for resi, we're seeing that's going on generally all the time. But the interesting phenomenon that seems to be occurring is that we are being, certainly at Six Senses, I think at ESPA and others, we're being approached more and more by developers who are not particularly interested in doing hotels, but are doing just residential developments and would like a spa and wellness component in their standalone residential development, which is also an interesting concept and just supports everything we've been talking about relative to wellness going forward in all aspects. So I'm kind of interested in everyone's viewpoint on
Neil,
that.
how do you get the financials? How do you dig the financials out if it's, say, second, third homes and you have, say you've only got 50 to 100 condos or villas, so you really haven't got any scale there, and the developers are exiting in a few years, say, for argument's sake, and what they're telling me is that the owners don't want the cross-service charge carried on into some kind of management agreement. I mean, how are you dealing with that?
Well, I think that depends. I mean, you know, we're doing 2 or 3 of those developments currently in India, in various parts of India, where the developers are saying it's fine. You know, we'll spread the ongoing cost and infrastructure cost into homeowners association type fees. So it is showing up in the monthlies. Now, you know, can you do that in the US or in Europe? I don't know. I think each property will, and each developer has to figure that out on their own. You know, then there's the membership component. I mean, one way to soften it is if you're in an environment that allows you to sell memberships, that allows perhaps outside usage of the facility, that when you're not just a resident of, which is what we're doing now in Mumbai. But so I think there's a few different ways to cut it, you know, depending on each particular deal.
And Rich, as a major investor, having just done Miraval, obviously, and I'm sure looking to roll that out in some form or another, what's your view?
Well, first off, we're a cash flow investor, so residential development standalone is not something we necessarily will do. And our business model generally looks at the hotel operating aspect of it. And first and foremost, the business has to make money as an operating business, as a hotel. Residential is always kind of a secondary aspect of what we do. But you know, for 2 decades now, maybe 3, KSL has been one way or another, either in one form or another, been doing multi-use development, so around a core resort property. So it's the core resort, we over-improve the spas, we over-improve the amenities, whether it's golf courses and swimming pools, and then we create a club. So you've got to create a club environment because you need that ongoing due stream. You need to be in an area that's got a significant or sufficient amount of critical mass of people outside to be able to come in. So you can't just do this and say, well, it's just closed off to that community. And then you add on the residential, and the residential, generally what we do, is it's limited use residential. And we've been very successful at what we call building kind of the 90-day model, which is you build a very nice kind of condominium or townhome development as part of the resort, and then you limit the owner's use to 90 days. And then that unit goes into a rental pool, and the rental is split 50-50 between the hotel operator and the owner after the hotel operator, you know, keeps a FF&E reserve. And what that does is, for the most part, we found our homeowners don't want to be there all year long. They want to come visit, and they want to be able to use the resort facilities for, you know, periods of time. So we've figured out kind of an algorithm to kind of understand when and how to sell these things to make sure that we meet the demand. But what we get is we get back a hotbed for all but 90 days, which then means that we then can put in hotel guests into that unit, which then provides people to go to the spa, to the pool, to the F&B. And that's our model. And that's about the only way we would approach you know, residential as part of a hotel or destination spa development.
Thank you. Andrew, maybe you can carry on that. Would you, I mean, I presume that you do invest in pure residential, which has got spa. Would you invest in wellness destinations solely on their own, if that's what they were, without a residential component? So I think there's 2 issues here. Mixed use to me isn't a problem, because mixed use we can get fees from, you know, in the normal ways. It's the standalone residential that seems to be the hardest one to get fees out of or to get a contract out of. But I know you've got many models.
Yeah, I would say that from working with Six Senses and what we've seen that works in a number of our locations, where the residential is part of that pool, and really is another amenity, a different product that you can offer to the customers coming in. It can work, but as a standalone, it's not something that we've sought to invest in. It's more as part of these multi-use and having that club aspect to it, for that you have the outside people coming in. It's also an amenity to the owners of these properties. It seems to work much better, and to have that base fees coming in from a residential community it really keeps the doors open. And then after that, everybody coming in off the street is your upside.
So before I go to Omer, it seems like you 3 are all saying the same, that standalone residential without other components is actually really difficult. Now, I have to say that we've been approached many times to do, say, very high-end, I'm talking very high-end, $10 million a unit plus, where they don't want outside at all. And we've tried to argue that flat fee and met with a lot of resistance. Would you enter that market?
You know, we also look at it as you know, we're predominantly, so we have the management company, the OpCo side, the management company, then we've got the investment side. So, you know, from an OpCo perspective, we would do that because we are also getting a piece of the residential sale. So we're getting a licensing agreement. So every time a condominium is sold, we get a little piece off the top. So by branding and providing those kinds of services. So that model kind of works very well for us from an operating company standpoint. Okay, now if I wear my investor hat, it's slightly different. So then, you know, the developer or the investor has to really believe that with that branding, we are able to increase their selling pricing at a level that makes it all worthwhile. You know, if we can drive a premium in the real estate sales, then maybe that works out okay for the developer.
I've been quoted, and I'll ask Omer in a minute, I've been quoted between 10 and 20% that if you have a good brand on a residential model, that it increases the real estate value of the unit by anything from 10 to 20%. You can answer that one, because you've got Omer's got lots in Turkey, so it would be very interesting to hear, because the wellness medical side in Turkey is quite interesting.
And all the region, I mean, all of East Europe, CIS, Middle East, I mean, where we're more heavily vested. First of all, getting back to your standalone residential bit, we are talking about, would you as an investor go into it, and would you as an operator take a fixed fee and operate the spa, et cetera, et cetera. But ultimately, there's an issue here. Assume that the investor is very pleased to do so, and assume that the operator is very happy to do so. Is this sustainable? Because our experience is that ultimately the developer is out of the picture because the condominiums are sold. So now you have a homeowners association and a bunch of owners. And in the long run, they're the ones who are going to sustain whatever you guys are doing. And ultimately, they start becoming unhappy with financing that and sustaining it. And ultimately, what happens is it starts suffering in terms of quality, and you're going to get under pressure. Ultimately, because you won't want to be there at that kind of a quality with less staff and no maintenance and, you know, squeeze on all your expenses, you'll probably walk out as well. So I think our responsibility as investors or investor advisors like we are is to ensure that whatever we do is a sustainable model, first of all, that is going to make the customer happy and the customer sustained in the long run. Unfortunately, what we're seeing very often right now is a lot of developers wanting to put these amenities, including spas and very high-end elements, into their residential components purely as a marketing edge, as a marketing differentiator, as an added value to the sale of real estate, but not to the life of the real estate, nor to the life of the owner. So therefore, I think we have a responsibility there to balance that act. And I'm very, very skeptical in over-promising amenities in a standalone residential, however upmarket, however luxurious it may be. It's got to make some sense as far as they're concerned. So therefore, you know, try to add it on as a city day spa or whatever it is, which is adjacent. The homeowners may have a benefit or a discount or whatever it is, free membership. But definitely it's got to be a business on its own so that it can sustain itself. That's that portion. The second question is in terms of the mix of adding value with brands to real estate. Our experience is that we've seen up to 30-35% added value from recognized brands. That is typically a misfit. That means that you're building some real estate somewhere where the ordinary established levels of pricing are X, and you're multiplying it by 1.35. That means really you're putting a bit of a misfit brand into a misfit area. You're way upgrading it. But typically 10 to 12% is something that we have seen, 5 to 12% perhaps we've seen, if mark-to-market brand is in the right address and the right profile of real estate, basically. So that works. The most recent development that I've seen in the Mediterranean is a health retreat only, quite medical, with real estate sales attached. Now, we've yet to see, the sales are open now, sales are moving, quite high price, seaside location. I'm not able to say much more in terms of the brand, etc., but it's a brand that all of you know from North America. It's a medical spa destination. 10,000 square meters of spa and 140 keys, plus quite a number of villas for sale, branded by the medical spa. We'll see. It's going well so far. But,
that was a model, actually, a lot of us did 25 years ago and didn't work. I mean, if you
I'm
look...
very worried about it, to be frank, but the developer seems to be quite happy for the initial sales. We'll see how the absorption goes from now on and when it actually kicks in.
Well, actually, also, timing's different now. I think it's a different time. I think the market's more ready for that kind of thing than it was.
Let's see how that's going to come up.
Yeah.
We'll see.
Great, okay. The other subject, which I hope you will discuss very openly and vigorously, is whether our models at the moment for hotels with spas, resorts with spas, wellness destinations, whatever it is a dated model, and it's time to change and look at other models.
Such as, just give a cue, in terms of other models such as standalone.
I didn't want to lead you too much, but it seems to be, and I hear this is sweeping statements, and I know that there's a lot of you here that are exceptions to that rule. So, for instance, it seems that a lot of the wellness destinations are struggling financially and are looking for investment and are really finding it difficult. Ditto with a lot of the medical spas. I mean, I keep medical away from this because I don't think it's so relevant to this audience. Then, for instance, you've got Miraval Rich, which is a very good example, which isn't a hotel with a spa. It's a wellness, but it's not a serious, I think, and correct me if I'm wrong, and I'll let Rich talk about that. But, I think we still have people now who want healthy lifestyle. They want organic food, or they still want to eat, they still want their glass of wine, they want to have fun because we don't have enough vacation time and all of that sort of stuff. So is there another model, you think, going forward? Because my view on hoteliers, and I'm so sorry because I know there's lots of you here, I think they're stopping the growth in this market. I think hoteliers, by the very structures that they have, things like lifestyle hotels, so I was going to try and get you guys to think about it and what you would invest in or what you thought, because we're fast forward, may well be the...
Just because I have the microphone, let me just kick it off and pass it over. Let me begin by saying I think wellness, the definition of wellness, I think is also developing right now. As just you said, a feel-good factor is a part of wellness, that's for sure. Now, whatever is a feel-good for you, including some elements of indulgence, may be overall an impactful element in your wellness balance. And therefore, when you're talking about a hotel or a resort with a spa or wellness element, how much of it should be actually as part of the totality of the product? And you look at it as a holistic investment, and make people feel good is not a bad thing really for a hotel either, to drive guests. I think there's some merit in rethinking that from the hotelier's perspective, and we're actually doing that a little bit in terms of pushing that forward, so that the wellness element is not sort of a cut line between this is the hotel part and this is the wellness part.
Exactly.
So
or departmentalizing too much as well.
Yeah, exactly. But on the other hand, in terms of spas and hotels and spas and resorts, I think we shouldn't generalize them too much, and I think we should treat them resorts, destinations on the one, urban hotels on the other. I just want to throw one thing and pass the microphone. Right now, there's a research going on commissioned by the EU. For the 5th time, they're trying to create a pan-European classification system for hotels, star system again. And one of the very, good luck. One of the very interesting findings, this is done by St. Gallen and Lausanne together with the EU. One of the interesting findings on the research on 5-star category of guest was dissatisfiers. I mean, there are satisfiers and dissatisfiers. In the satisfiers, I couldn't find the spa. On the dissatisfiers, I found it to be ranking number 2. So if the spa isn't stacked up right, and if it doesn't have the right qualities that are expected, it is a major dissatisfier. Let's put it the rank-wise. If the bed was uncomfortable in a hotel, ranks number 7, whereas a spa ranks number 2. And on the dissatisfier overall, including 4 and 5-star, it's number 1, dissatisfier. I think that is something that you guys should take a lot of pride in and start really looking into what that means in the totality of the hotel. So it's just food for thought, really.
Yeah, I think from our point of view, what we've seen is people go away for their 1 week a year sometimes to a destination spa or to get that wellness as they define it at a resort. And where, from the investment side, we see a big opportunity is to continue that relationship outside of the resort setting. So you go for your tune-up once a year, but you have your programs that people can tune into from home and get their checkups throughout the year, use the products, and just tying it all back to not just a destination or a being at the location, but more in terms of integrating what the customer went to and saw at the resort into their daily lives and finding the product services around that to service the customer and what they want.
I mean, there's so many variables, right? It's impossible to really generalize it. So just to, a few things that come out. Obviously, the whole resort model versus the urban model is a completely different kind of business to go down. Actually, in many ways, an urban model could perhaps be more productive because you've got a captive audience in the city that you're in, and if you have the right programming and the right loyalty, and then as Andrew says, that's connected to something you did in a resort, there's a whole financial energy going on around that. At the risk of upsetting, most hotel people don't really understand what we are talking about.
Well, that's my point.
I mean, a hotel spa is a hotel spa, and certainly hoteliers of my generation, I'm kind of one of the oldest in the room, we didn't grow up with it, right? We didn't know, and how many GMs never even go to their spas, even have treatments there.
So is there a new...
I think there is. I think there has to be.
Don't you think we all need to think out of the box? And I'd say lifestyle hotels, it's just... That's because of ease of semantics. But where everything's coordinated for the guest, and that's from room, how you treat the room, how you treat the food, what's available.
Well, I think for the hotel spa to become a really meaningful piece of the hotel model, it has to be that. I mean, I have a colleague who says there's no box, so it's not about thinking out of the box. It just needs to be this amorphous approach to product and concept and so on. So, I mean, I go on forever. The last thing, the destination spa model as we have known it, particularly in the United States, we do not believe is sustainable. The labor costs...
Can you extend on that? What do you mean by a destination spa? Because again, to me, the Canyon Ranch and the Miravals are not destination spas as in resort spas.
Well,
I think, again,
would Canyon Ranch agree with that? I'm not sure.
Aren't they a wellness
that
destination?
They would, but I think any product like that is so reliant on multitude of very highly priced kind of doctor-type people is not going to work financially today. So there needs to be a new approach or a new paradigm as to how you connect with those disciplines, other than it being having them physically on property. But what I'm interested in, what I'm really interested in, is why you invested in Miraval.
There you go. I knew that was coming.
What are you doing in Miraval?
We make money. Bottom line is, I think the difference between us and other investors in the space, say Pegasus, I think, has a very similar philosophy, is we look at a business and we say, okay, how can we make money with it? And we look at a business like Miraval. Miraval's a very successful business. I think people confuse, first of all, I think people have misguided perceptions. I've walked around this thing, and I don't know how many people have said, well, Canyon Ranch, do they make any money? Canyon Ranch makes a lot of money. You guys, most of you here, if you could make the kind of money that Mel and Jerry are getting out of those two, now, they may have capital issues, right, where they over-leverage, but that has nothing with the financial viability of that business model.
But Rich, do they make money out of all of the different models?
Well, they make money out of Vegas. That's a cash cow. Fine. But still, it still works, and people learn about Canyon Ranch by going to Vegas. They make money out of Lenox, and they make money out of Tucson. And by the way, Most of you here, you would sell it and retire, and your grandchildren would live on the proceeds. So bottom line is, you'd be happy to own it. So I think there's a misconception about whether or not these destination resorts spas make money. They make money. Miraval makes money. That's why we bought it. The difference is that we bring to it a discipline that Miraval didn't have about how to manage cost, how to manage, a business, how to deploy capital. We look at it and we say, what's wrong with the experience? We look at, say, okay, well, they're very focused on one thing, but fitness, I'll be self-critical. We think the fitness at Miraval was subpar, so we think there's an opportunity to create a better fitness product there. So we look at it, and we look at it from an investor's point of view and say, it's not good enough that the spa works or that Spirit flight's a great experience. Every aspect has to make money. And so we bring to it a P&L discipline that says, you're going to make money in F&B, you're going to make money in your retail, you're going to make money in your spa, you're going to make money in fitness. Everything's going to make money.
Yeah, but medical doesn't. So you're going to drop it?
There is no medical at Miraval anymore.
Okay.
And that's why we thought Miraval made sense more than Canyon Ranch to us, because we think the medical model is a difficult model. And, when we did Canyon Ranch at the Homestead, before we sold it, the whole thing was we looked at to Jerry and Mel, we said, we do not want medical. We want everything else you have but medical. Because our guests, we want to bring people to have happy experiences. We want the guest to return. And what we find is the guest who's there to relax and enjoy themselves and maybe have a mindful experience, a well-being experience, whatever it is, whatever they call wellness. The one thing is they're not really interested in being around people who are worrying about having their blood drawn and, is my heart rate, in the wrong place, so I have high cholesterol. You can go to your local doctor and have that done. What we're trying to do is create experiences. And I think the problem is, again, as you listen to this what I've taken away from this summit is, there's not one market out there, right? So we are all thinking about things a little bit too narrowly. We should be thinking about things of, what are we doing for the next generation? We heard this great presentation on millennials. Well, frankly, I'm not sure Miraval makes sense for millennials, so we're going to have to find a business model that works for millennials. And I'm not sure that Miraval would make sense in Asia, so we've got to find a business model that makes sense in Asia. And in Europe, well, Europe's got an aging population. So, I was talking to a gentleman who said they can't put millennials in the same spa as their core customer, because their core customer doesn't want to be in a sauna or a hammam or something like that with a bunch of young people. So there's going to have to be multiple business models, multiple verticals, and the key is, at the end of the day, to be able to find the best practices in all these businesses, cross-pollinate them, and create something that appeals to a wide variety. But don't try to create one model and say, is this work and that's the model? Or it's multiple models.
Fantastic. Do you have anything to add?
Yeah, I would say similar to that. When we first got involved with Six Senses, they had a destination spa off the coast of Phuket on an island. And what we saw was, as a startup, that it was alienating a lot of the customers. You'd have a husband and wife that would come to the destination spa. The husband would want to participate in some of the aspects sometimes it was the other way, the wife would. And in the end, one of the partners would leave dissatisfied. Somebody couldn't get their wine, there was no TV in the room, and it was just a little bit too specific towards what we saw at that point in time as the customer we were trying to serve on the destination spa. So it widened out a little bit. You had TVs come in, wine was served up into from 5 p.m. onwards. There was only one raw vegan restaurant rather than two. And then to the extent that we continued to dilute it out to the point where we ended up separating from that, and you see it today, the exact same product out there operating under a luxury hotels banner is doing very well as just a hotel with a very large spa to it. So I think that aspect of how specific you make this, like Rich is saying, you need to tailor it to your customer base. Some people want that all-in, in-depth programming. Some people want the other side, and it's being able to offer that in the right setting to the different customers.
Well, it was very refreshing to hear from an investor's perspective that segmentation is key, and the close definition of who you want to serve is key, because typically what we have with investors is that whenever they invest, they want to hedge so far that they want to serve everybody. In case he wants to come, he should be happy. In case she wants to come, she should be happy. If somebody is a vegan, she should be happy, etc., 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 right? And what we're seeing now is that those are quite obviously recipes for failure as we go along in the time span. And the higher segmented products who define their market segments and actually patiently work towards filling their space with that segment rather than getting cold feet when they haven't in the early days of the development are going to succeed. So that is on the one hand I agree with, segmentation, define your product and define your segment very narrowly. However, I don't quite agree with the fact that everything in the complex should make money. The spa should make money, F&B should make money. Why? The lobby doesn't make money. I mean, why? Should we remove the lobby now? You know, the garden doesn't make money. Are we going to take the entire landscape out? Some of the functions, just by the virtue of the fact that there's a bill transaction in that room, does not mean that it is a profit center, and it doesn't really have to be. Perhaps tradition has led it that we cut a bill at the end of a drink or at the end of a session in a spa or wherever it is. It's just methodology. I could have done it without. I said, what do you want to drink? Okay, Sue, you want champagne? Here's your champagne. No bill, nothing to sign, and I'm not going to add it to your bill because I'm going to charge you $4,000 in your bill right now anyway. So if that was the model, nobody was going to say, how come F&B made money and F&B didn't make money, and God knows what the stock was, the F&B cost was. I mean, these are all classic 80s hotel thinking. And I think we need to look at an investment and a resort and a complex as a holistically. And I could deliberately create loss leaders, no problem. They could be my differentiator, they could be my marketing argument, they could be my talk of the town, they could be my, media piece, whatever it is. But just because there's a bill, let's not get too obsessed in every single space of the hotel, because then it becomes institutional. You cannot help then create a holistic experience for the guest if every single aspect in the hotel are looked at as a profit center.
And how do you think we can get... One of the banes of my life going forward as an operator is when we do wellness packages. So, for instance, in Turkey, we have a wonderful property, and they're obviously trying to extend their seasonality by a couple of months either side, and we have that worldwide. And the bane of my life is cost share. So, you know, you end up with, you do a package for 4 nights, and it's a brilliant package, including wellness and sport and food and everything else, and then you end up in this battle with the chef and the rooms division and the GM, and in the end, the spa makes nothing, or whatever it is. I mean, so that's a mental attitude of hoteliers. So we come back to that, because your holistic approach to the whole resort, I think, is the way forward. Oops, Rich is saying no. Well, no, for getting holistic experience.
Not if you have institutional investors like we do. But by the way, if you want to know how to make money in a lobby, come talk to me. Because we make money in our lobbies. Because the lobby shouldn't be a dead space. The lobby should be an energized space. So we put in, you know, bars with sports bars, and we put in retail, you know, and we make money in lobbies. I mean, the bottom line is, it's all how you do it. People aren't offended by spending money. They're offended by not getting value for their money.
So what you're saying is it comes down to marketing, really, because but
and how you
our
present
problem in the traditional hotel
Look, you
model.
can go the all-inclusive method. People love all-inclusive. It's
do.
a big segment. I mean, people travel, you know, to Mexico and Dominican Republic, and they do the all-inclusive model. It's hugely successful. At the end of the day, though, go talk to a really successful all-inclusive owner, and he is figuring out exactly everywhere he's making money. And I will tell you that, and that owner will tell you there is no loss leader in their model. They are figuring out down to the size of the portion of the meat that they are serving you, how they are making money. But the person who's going there perceives it to be great value because they pay once and that's it. But you can go to any, you know, major resort in the US and people don't. Yeah, you get occasionally someone will complain, yeah, my kid, ordered 10 smoothies and finished half of them, and it cost me a fortune. But the bottom line is that at the end of the day, no one walks away and says, I won't go back to that hotel because of that reason. It's because if they had an overall bad experience, that's why they're not going to go back to the hotel. Or they don't perceive they got value at the end of the day.
I think it's cultural, I think it's cultural. I kind of agree with you. To me, it's about total revenue, and it's about RevPAR, and it's, you go to the all-inclusive, it does exactly as you say it does, no argument. But I go to the place he's talking about, we're going to get $4,000 or $5,000 a night for that place. And then it doesn't matter so much, actually, how you allocate the different pieces.
Go to $4,000 or $5,000 a night places. Most people in the world, you're talking about the top 0.5% of the world population. And we're supposed to be talking here about creating wellness that's available to more people. And you're talking about places where people are spending $5,000 a night and getting a free bottle of champagne. There's a huge disconnect here. I'm talking about creating environments for people that they can afford.
But $4,000 was just a little example. I could actually talk about exactly the same model at 250 or 300. It's just a matter of what you give. I wouldn't have given her champagne then, I can assure you, but we could have given her something. I think ultimately we need to be looking at a bottom line. And it's no good that departmental profits, especially as in the uniform system of accounts that we use. I was on the advisors of trying to allocate overhead costs into it and make the 11th edition, and it's a total nightmare. In fact, it is all hypothetical. The departmental accounts finish somewhere, and then comes the overhead departments. They're not allocated anywhere anyway. And therefore, departments making profit actually means not a lot if you're going to make a loss at the end of the day. So we're bottom line oriented from a perspective of investment. So departmental accounts are really virtual. And to answer you in that battle of off-season allocation of revenues between departments, again, I think you need to change roles between season to season. In the peak season, you're an amenity. Sorry about that. In the off-season, you're the leader.
Yep.
So actually, the room should be thrown in.
That's my point.
Exactly. I mean, you should be the one who actually are bringing the customer in. Nobody is going there to sleep in that room and, by the way, have a massage. They're actually coming for a complete package, etc., created by the spa. Yeah. And as a consequence, indirect consequence of that, they're going to sleep somewhere. So that the room should be in a minority and the spa should be in a majority. So it's just really a little bit of a mindset. You'll have a tough time with traditional hoteliers there. But ultimately, again, we should look at the bottom line. But yes, you should, when there's a package and you're driving the market, then the rooms are an accessory. And the spa program is the product.
I'm totally there, but getting hotels to agree that is another matter. And they're usually, they are seasonal, so Greece, Turkey, Ireland, those sorts of places.
A lot of them are. I don't think yours are, right? I mean, you're okay, roughly. I mean, are they dead or? God bless you. I mean, that's not what we're talking about, I can assure you. Yeah, exactly. We're talking from 90 to 20, so.
We're nearly out of time.
I don't disagree that you've got to maximize profits wherever you can maximize profits. That's not the point. But I do feel that, when you start looking at hotel product on, revenue per square foot and whatever, you start to get into another world that can be dangerous, which is kind of the point that I was going to make. You also come at it from a point of view, and it depends on the investment cycle and whether it's a private equity play, and you've got to be in and out in a determined period of time. I mean, there's coming back to there's lots of variables on the investment side as well. You talk to many of the Middle Eastern sovereign funds. I mean, they're never going to sell it, right? They're never going to sell it. So the financial metrics become very, very different. So I think the point is this one size does not fit all here, right?
We're nearly out of time. So to summarize what I took away, and I'll be interested what you took away, is that one size doesn't fit all. That going forward, wellness still needs a lot of definition. That there'll be multiple business models, which I think is absolutely essential. And I think we're in an era of individualism and personalization, and that we as an industry have to look at that in a more open way. I think we're in danger of following rather than leading. My view is all cultures are different. So again, that one size doesn't fit all, and we've heard a lot of conversations here that have been specific to one market, and I think we have to be very conscious of that. So I would really like to thank this panel. I could keep them all day, and I'd love to dig deep about those figures and get them all arguing much more than they have. So please say thank you.